Hello guys, how you doing this morning? And welcome to your market report for today. Glad to have you guys here. Today is Friday, the 8th of June, 2018, and I'm going to make a couple predictions this morning. Now, I'm one of the few guys out here, I kind of put my neck on the line a little bit and make some predictions about what I think's coming in the markets. I think I hit it. I hit it quite good. An awful lot of times I get it straight on, because when I make my predictions is when I see a trend developing. That's when I start to make my predictions. I see a few trends developing this morning in the market. So we're going to get right into it. We're going to open up the charts right here, and we're going to get to the silver price. And the first thing I see here is I see a trend developing in silver. I see us heading back up toward our old range, so I'm going to make a prediction. We're going to head back up to the old 1720 range, or 17, like between 1710 and 1740. We're starting to creep back up into our old range, and I don't really see a big smackdown coming this time for a little while, and we might move back up into that range and stay there for a little while, of around $17.20. Silver deserves it to be up in those prices instead of down here. It's getting awfully hard for them to keep it down in this lower range. I see them having more and more trouble keeping it down into this lower range, because when they do a smackdown now, I notice that they get a bounce back effect awfully bad. And one of the reasons why is because the cost of production, especially now that the oil prices went back up a little bit, the cost of production is nearing the price that they have it at right now, and there's no room. There's very, very little breathing room for profit, and this is why I'm making this prediction that we're probably going to go back up into around 1720 on silver. So now let's head on to Bitstamp and cryptocurrencies, and we see Bitcoin staying in at 75.78 right now. Now, there's guys out there just praying for it to go up. Different fellas on YouTube here, I'm not going to name any names, are just praying for this stuff to go up, because they love reporting on it when it's in a bull market. But the real truth of the matter is Bitcoin, ever since it's turned down from $19,000 and something, almost $20,000, it's been in a bear market. This cryptocurrency has been in a bear market. It's been in a bear market going back. Let's see. Let's take it back to the 30-minute here and pull our chart. No, they ain't gonna do it. 2 hours. Right? Ah, yeah. Oh, no. Okay, let's go back 12 hours. Okay, 12 hours does it. Here, a 19,666. And if you look at this 12-hour chart, what you're gonna actually see is you see the bear market. You see lower lows and lower highs. Bing, ba, bing, ba, bing, all the way down the bear market. And what this bear market is showing a consolidation, but haven't made the final bottoms yet. And we made one bottom right here. Didn't really make a bottom here, but sort of. It's trying to make another bottom. What we need is before we need the bull to start again, we need 3 good solid bottoms in here. This is what we really need. And I don't really see them. I see one bottom, one good solid bottom right here. Right? I can't really exactly find the bottom here. I was trying to make a bottom, but I don't really count that as a bottom, or this as a bottom in here around the so we've really only made one good red candle spike down bottom. Only one there where we had red candles taking her down, and then it shot back up again. That's what I call a bottom right there. That's a good little bottom right there. I see one right there, and I see 2 half-assed ones here, but not really. Maybe it's sort of. I see I see a shakeout. We're gonna need a couple more. See, this was a shakeout right here. It shook the weak hands out, and you had in more stronger hands buy back in again. We need a couple more good shakeouts to end this bear market, I think. Now that's just my opinion. I don't know what you guys think of it, and that's not financial advice. But I can see us staying in this bear market a little bit longer yet. But we're definitely in a bear market and for cryptos. But these guys are still bullish. They're permabulls, you know, and they're constantly saying, "Oh, Bitcoin to the moon, Bitcoin to the moon," but we're in a bear market right now. A bear market is your time to accumulate. By the way, it's accumulation time. And the worse the bear market gets on the cryptocurrencies, the more you guys should be accumulating. The worse this gets, and I think that it could get worse before it's going to get better, and that's your time to accumulate. Don't accumulate when it's in the bull market, because that's not when to accumulate. That's when it's up like when it was in the bull market and up $18,000-$19,000. If you accumulate, look at all the money you've lost. You accumulate when it's down at its bottom, rock bottom. How low will its rock bottom go? Who knows? It might go lower than $2,000, and you can buy a whole Bitcoin for $2,000. And then when the next bull market hits, we're going to see unbelievable highs with this stuff. So cryptocurrency market capitalizations, $338 billion with Bitcoin at 38.2% dominance. Numbers are in the red today, except for EOS, which is just very nominally in the green. Litecoin, 118 bucks. Ethereum, 598. Ripple, 66 cents. Bitcoin Cash, 1,108. We're seeing some cheaper prices on these coins. You can see this, but I think that we're going to see cheaper prices yet coming up. So anyway, let's move on to the Dow Jones Industrial Average today. It's down 65 points on the day. This is not really surprising because it's getting up near it's getting up near resistance, and so it's turning down a little bit today. Not much. We're seeing a market that's just been going along in this range, right about. Let's see, where's the range? Right about here, 24,727. Now, here's prediction. Another prediction. We're going to get back into prediction time again. We're seeing the calm before the storm. Now, look back here. You see this peak it made on the 26th of January, and then it fell off, and we got a precipitous fall until February 8th. From January 26th to February 8th, everybody was in panic mode. The market was dropping sometimes 1,000 points to a day, and we had this rather large correction in the markets, and then the Fed stepped in, and we've been bottom bouncing ever since along in this same range that they created. Well, what's going to happen is the end of this month. I think that what's going to happen is pressure's going to build because the yields are the bond yields are going to start to rise again significantly at the end of this month. This is my prediction, by the way. And when we get to that point, it's probably going to take a couple weeks for the bond yields to rise up again. But what's going to happen is we're going to get another one of these corrections, like this. This is my prediction that we're going to get another one of these corrections, like this correction. A rather steep correction, but the market's probably only going to have a lower starting point, and so we started up here on this correction at 26,616. I think that we're going to start probably at around 25,500 or somewhere around there, or 25,000. You know, somewhere close to where we are right now. I think for the next month, this market's not going to go much of anywhere. It's going to continue to bounce like it's doing right now. It's like a bouncing ball going boing, 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 you know. It's going to continue to do that until the end of this month. and then it's going to build up pressure in the early part of next month for about the first 2 weeks, and then we're going to see the another one of these spikes downward. Just like we saw here. I think they're going to be able to control it, but it's going to start from a lower position, so it's going to go down lower. It's probably going to go down to maybe 23,000, or it might even break 23,000 and go down to maybe 22,500 or something like that. And then it's going to start to settle back again like it did this time, because they're going to step in with probably again another round of emergency stimulus or something. They'll step in and they'll settle it down again like they did this time. And then what I think we're going to do is we're going to go for the next 3 months again, just like we did this last 3 months, a repeat, wash, rinse, repeat cycle. This fall, I think the big one's coming. When they go to 50 billion, they're going to create significant enough pressure where the fear is going to enter the market, and we're going to see really big falls in the market then. That's when we're going to go below 20,000, and that's when the real fear is going to set in. We're going to see a massive market this fall. I think it's setting up for this fall. It's going to wait until the Fed gets at full steam ahead, 50 billion a month. I think that's when it's really going to set in, the real big market crash this fall. And that's when it's going to prove to be unstoppable, because what's happening is this market, these crashes, these small, not really crashes, but what you'd call corrections, like we had January 26th through February 8th, this one here. And then if we get another one coming up next month, like this one, very similar, what they're doing is they have a cumulative effect on the market as well. The market is going to lose an awful lot of its enthusiasm. It's not a bull market anymore. It's changed over into a bear market after we get the next one of these. You know, the first one has a certain effect on the heads of the buyers. What we have is the buyers on the way up, this market on the way up, we had all kinds of these perma bulls who, what would happen is every time they'd see a dip, they would see that as a buying opportunity, and then they'd buy on the dip, and then they'd make all kinds of money coming up here to the peak of 26,616. That was their mentality. And it's a mentality that's run on something called, it's a psychological thing that they call Pavlov's dog. Believe it or not, that's what they call it. They call it Pavlov's dog. It's a reinforcement technique, so that every time the dog hears the bell, he salivates. Well, that's the way with these traders. Every time they see a dip on the way up here, they salivated to buy, and they bought in on the dip, and they made all kinds of money all the way up to the peak. But what's happening now, all the way along here, is we're seeing these same guys, these perma bulls, trying to make money, but they're not making money like they were, and so they're getting less and less reinforcement to buy on the dip as they used to have, and this has an effect on the market. Believe me, this has an effect on the market. These markets are not totally controlled, like they say. Oh, they're totally controlled. No, they're not totally controlled. They're partially controlled. It's still an awful lot of it's got to do with traders and stuff. And if these markets go into crash mode, this total control is out the window. This market can go into crash mode and absolutely crash just like 1929. And I don't care who they are, the plunge protection team or whatever, they'll run out of money. In the end, they'd have to close the market. They'll go into panic mode, because this whole thing is not totally controlled. It's partially controlled. Anyway, I'm rambling on a little bit. Let's move on to oil prices. 65.85. We're down 10 cents on the day, 0.015% on the market today on sweet light crude, and this is actually a market that's a little bit bearish right now, the oil market. But I don't see it going too much of anywhere. I can't see it breaking below 60, to tell you the truth, on sweet light crude. And then I think I really think ultimately this is going to turn bullish. this is going to turn bullish again and go back up into the 70s again. Not too much longer from now. And the long-term outlook for oil is $200 a barrel. On the long-term outlook, going ahead like three years or something like that. You know, going ahead a while. The long-term outlook is do not go out there and buy yourself that expensive SUV right now that takes a lot of gas, or the Hummer or whatever, because you're going to be very sorry, because it's going to lose an awful lot of its value, because gas prices are going to go way the heck up. Nobody's going to want those big cars that consume a lot of gas. Everybody's going to want a little 4-cylinder. That's what's coming down the pike. Okay, so now let's look at bonds. We got a mixed bag today. The long bonds are trying to move upwards, and the short end of the yield curve is trying to fall. Yields are trying to fall on the short end, and they're trying to go up on the long end today. But this U.S. 10-year until the end of this month has kind of capped itself at 3.1%. I don't see it going over that before the end of this month, until the Fed raises the bar, so to speak. Now, U.S. dollar index, 93.68. And what we see is a rising dollar today, but it's not rising that much, and it's probably just about had its little up for the day, uptick for the day. It's probably going to start trying to dipsy doodle back down to around 93.45 later in the day. Probably by tonight it'll probably be back down to 93.4, and this will have a little effect on the silver price. We're going to probably, when we see the dollar drop back later in the day, we're probably going to see the silver price go up to maybe 16.90. It's creeping. It's been creeping. It's been creeping the last few days, and I can see it continue to creep back up into that 17.20 range. Okay, so thank you guys. This has been your market report for today, and you guys have a great weekend. We're in the spring now, guys. What can I say? I mean, if you haven't been out there and had a barbecue yet, it's time to start planning one. We'll catch you guys on the flip side. Bye-bye for now.